Good morning, good afternoon, good evening, wherever you are. Thank you very much for joining us. If you are new, please consider subscribing to our channel. We want to prove to YouTube algorithm that the content we dish on this channel must be shared to a wider audience. So let's do our bit, and I do thank you in advance. So I'm your host today, FD465.tv, bringing you an update to what's been going on with this so-called Bitcoin ETF or spot ETF. What is it? BlackRock, Wisdom Tree, Fidelity. What could go wrong? We are here to share our opinion this week, whether this is good for the space or not. I know what happens next. It's not going to be down to us. The market is going to do what the market is going to do. So while every crypto YouTuber and their cat has been busy celebrating the arrival of BlackRock and their recent Bitcoin spot ETF application over in the US, alongside the likes of Wisdom Tree, Invesco, Fidelity, and a whole host of other big players from TradFi or traditional finance, is this really the play to bring crypto nirvana to the space? Let's find out. What I'm going to share with you guys, these are just my own opinions. It's not financial advice, and it's meant to be for entertainment as well as educational purposes. Now, everyone in their granny is aware of BlackRock's BTC ETF application, but there are other traditional finance players such as Wisdom Tree and Invesco who have followed BlackRock in applying for a spot Bitcoin ETF. But what is a spot ETF and why it matters so much, not just for Bitcoin, but for the rest of the crypto markets? Here is a brief overview of each of these three huge players from TradFi who have all of a sudden found desperate cheerleaders from Bitcoin maxis, new cheerleaders for TradFi. So, BlackRock, founded in 1988, BlackRock Incorporation is an American multinational investment company based in New York City in the US of A. It is the world's largest asset manager, boasting assets under management or AUM of approximately 9 trillion as per December 2022 figures, which is a decrease of around 10 trillion from their opening portfolio, which is a decrease of 1 trillion from around 10 trillion. BlackRock's purpose is to provide institutional clients with asset management services from a risk management perspective. The founding members were Larry Fink, Robert S. Capito, Susan Wagner, Barbara Novick, Ben Golub, Hugh Frater, Ralph Schlossstein, and Keith Anderson. BlackRock owns shares in top-performing tech companies including the likes of Apple, Microsoft, Amazon, and Nvidia, among some notable names. So it's not your typical run-of-the-mill organization or hedge fund, but an entity with a huge influence throughout the globe. Now, please note one key missing word from my introduction. I did not mention charity or charitable. In other words, BlackRock are not making these moves all of a sudden to make a donation to pump your bag. No. In fact, the phrase, be careful what you wish for, is perfectly appropriate in this case. They are not coming here to donate money to pump your bag. They are here to make money. So that's just something to pay attention to and to be aware of. Next is Wisdom Tree, founded by Jonathan Steinberg in 1988. Wisdom Tree described itself as a global financial innovator, and it is an asset management company that offers access to a wide range of investment solutions covering commodities, forex, equities, fixed income, digital assets, as well as short leverage positions. Compared to BlackRock, Wisdom Tree's assets under management is almost non-existent or negligible as of January 2023, only showing still $87 billion of assets under management. But compared to BlackRock's 9 trillion, that may sound like small change. The third one is Invesco, another traditional finance entity joining the ETF scramble. It offers a broad range of actively managed domestic, international, and global specialty and fixed income mutual funds to help customize their investment portfolios to their unique needs. Also on offer is a basket of over 200 ETFs covering several products. Assets under management are reportedly around $1.5 trillion. Now, for some people, they just hear these words being thrown about and they might not mean anything. So, what is a Bitcoin ETF? Well, a Bitcoin ETF is an investment vehicle which tracks the price of the underlying Bitcoin, but without actually holding the Bitcoin itself. A Bitcoin ETF aims to provide investors with exposure to the price movements of Bitcoin without directly owning a single Bitcoin, just exposing yourself to the price, which makes sense for some, yes. And ETF stands for Exchange Traded Fund. An ETF can be bought, sold, or traded on traditional stock market exchanges, and in Bitcoin's case, without the need to use a crypto exchange. First created and launched in the 1990s, ETFs were initially created to provide access to passive indexed funds to individuals as well as institutional investors. Of course, their applications have broadened since then, and they now cover all sorts of investor and trader their type. ETFs now represent everything from broad market indices to niche sectors or alternative asset classes. While in this video we are mainly going to be covering the Bitcoin ETF, please bear in mind that ETFs can be created to cover a whole range of assets, commodities, industries, currencies, to name just a few applications. The advantages of using ETFs as an investment vehicle include the fact that they are cheaper and better than mutual funds. ETFs are also lower cost to diversification strategies for trading, since an ETF can hold more than a single asset. Investors using ETFs can also benefit from a range of arbitrage options. Gaining access to an underlying asset price without actually holding that asset, in Bitcoin's case, you may call it paper Bitcoin. By opting for ETFs, investors are spared the slow death associated with creating and managing a Web3 wallet, such as MetaMask, and the horror associated with keeping your own keys or another Bitcoin-related wallet, in Bitcoin's case. There is also plenty of regulatory clarity with ETFs. ETFs' disadvantages include excessive management fees, usually baked into the fund. You can only ever own a paper Bitcoin. That's a disadvantage as well. You're not owning the underlying asset, it's just non-existent. It's a mirage, it doesn't exist. No 24/7 trading, as the traditional finance markets operate a rigid trading timetable. And don't forget the inaccurate pricing that could be in play as well. In the case of Bitcoin, an ETF may not have the option of converting your fund into the underlying asset, that is buying the actual Bitcoin and holding it yourself. So, not your keys, not your crypto. Remember what the Bitcoin maxis taught us all from the beginning, and now they are the cheerleaders of spot Bitcoin ETFs. Work that one out. It beats me. It is also important to highlight some of the dangers to the crypto space posed by Bitcoin ETFs and ETFs in general, which could shock many of you, especially those that joined this space because they were seeking freedom from legacy financial systems. And what you come across are ETFs. So, warning number one, decentralized crypto exchanges, or SECs as we know them today, are seriously under threat. These guys coming with their ETFs, they will come with their own exchanges. You know, the other day there was a new exchange launched. That's a warning shot. If you are supporting this, more of that is coming. Okay, the next issue I wish to highlight in this video with regards to what's happening with TradeFi businesses or entities moving to the spaces, yes, we need them, but the possibility of selling more Bitcoins than what's actually in existence, is that possible? Of course. Bitcoin price manipulation is incoming at an industrial scale. These guys have had practice. The crypto space, you put one step wrong, it's all headline news. But they get fined more than the crypto businesses get fined on a daily basis. You're talking of big institutions like your JP Morgan, Bank of America, they get fined huge amounts, but you never hear about it. But there you go. Do as we say, not as we do. Sound just like that. What about the seemingly cozy relationship between the US Securities and Exchange Commission, or SEC, and BlackRock? Could these two players be working together to bring this space down in order to get rid of competition? Of course, you can't dismiss anything. Anything is possible with this lot. After all, what has the US given us to date? Well, we know there was FTX, and they are trying to smudge that one. I don't think there's proper investigation going on. It's charge after charge now being dropped. You don't know what deal is being struck behind the scenes. FTX, considered by some within the space as a Trojan planted by the US government and their TradeFi associates. I can half believe that. Also, don't forget that it was from the SEC shady dealings that we witnessed that shit show called Prometheum in front of Congress not long ago. That was a week or so ago. Prometheum, what the hell is that? And don't get me started on Gary Gensler's infamous rant about the crypto space, hucksters and stuff like that. Come on. So an ETF, nothing to see here. I'm not cheering, but if it increases the size of the space, why not? More participants, the better. But what baggage are these new players bringing in? That's something to watch out, not just to be celebrated in darkness. Let's keep an open mind. Now, Bitcoin is purely a speculative asset, and speculative assets are easily manipulated and or controlled. Therefore, there is a chance that the same saviors of today could be the villains of tomorrow. I'm talking of your BlackRocks and your Wisdom Tree and your Fidelity. They could be the villains of tomorrow. Any prospect of success must be tempered with a slight dose of caution and let the events play out while remaining cautious all the time. So, to conclude, is BlackRock, Invesco, and Wisdom Tree and the rest of them coming to save the crypto space? I don't think so. They are coming to make money. They're not coming to make donations. But what we could see happening is that once these TradeFi players join the space through the so-called Bitcoin spot ETFs, there is a slight chance they may actually stay for the tech, like most of us, the tech on offer from other better technologies that are actually being used. Think of Ethereum, Polkadot, Cosmos, Cardano, Algorand, Quant, Injective, just to name a few. And is holding Bitcoin better than having an exposure to a Bitcoin ETF? I'm not sure. This is simply because even with Bitcoin itself, you don't have anything tangible but rise to a network carrying value value which you can't really see or touch? Let's discuss in the comment section. Until next time, this is FD for SearchPath.tv signing out for now. Bye.